the other currencies are worse than the dollar. I mean, you can see that in terms of what's happened to the gold price. You look at the euro. I mean, the euro as an international currency seems to have declined in terms of its use in transactions, while, the dollar has held relatively steady at around about 50% of all estimated transactions. The point I really try and get over is that what is moving is it's not so much the gold price, it's more the value of paper, and that should alarm. That really should.
As far as what Alasdair said, he's right. It's not that gold goes up, it's at the currency that we measure gold in, the fluctuations of those currencies in particular in the dollar.
In a compelling discussion on the gold sector, experts AndySchectman and AlasdairMacleod weigh in on gold's rising strength against the US dollar and key insights from the recent BRICS Summit. Macleod emphasizes that the core driver in the gold-dollar relationship is the weakness of paper currencies, not merely the nominal price of gold. This shift is evident in gold's recent performance. It has achieved gains for 4 consecutive weeks, with the past 3 weeks regularly updating all-time highs. In futures, gold surpassed $2,800 per troy ounce, although the spot price stalled slightly as it neared this level. Since October of last year, when signs of a monetary policy shift first appeared, gold prices have surged by 50%. The dollar index, meanwhile, has corrected after its 4-week streak of gains, a pattern often seen as national currencies and bond markets face pressure in the lead-up to significant elections. AndySchectman supports Macleod's view, noting that gold's upward trend signals its strength and the dollar's erosion in value. He argues that gold serves as a critical barometer for the health of the monetary system, reflecting a dollar that, based on economic fundamentals, appears stronger than it should. Gold is holding on to marginal recovery gains and trades above $2,750 per ounce. Simultaneously, the 10-year U.S. Treasury bond yield has faced challenges, unable to gain momentum after a weaker-than-expected October jobs report and disappointing PMI data. These factors have helped gold dollars maintain its footing, adding to gold's momentum. With gold breaking records this year, analysts suggest the rally is far from over. Growing concerns around the U.S. fiscal deficit could further support gold's position, encouraging more investors to view the yellow metal as a safe haven amid ongoing economic uncertainty. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop.
It's in everybody's common law, whatever the government propaganda says. This is why, if you want to vote against the dollar as a foreigner, then your natural place to go actually is to go to gold. And I think that's what's happening. It's not that, say, the PBOC is buying gold. It's more a question that they're selling dollars or they're reducing their dollar liabilities. And that's the way to look at it, I think. That being the case, the only thing that's going to turn around this relationship is a very, very sudden turn in US economic and monetary policy. But so many people will get harmed by that. It's very hard to see that being a deliberate act of policy. But until that happens, I'm afraid the purchasing power of the dollar, and in Steve's word, the least dirty shirt, that's going to continue to decline, and it's going to take the other currencies with it. The other currencies are worse than the dollar. I mean, you can see that in terms of what's happened to the gold price in those currencies. And, you look at the euro. I mean, the euro as an international currency seems to have declined in terms of its use in transactions, while, the dollar has held relatively steady at around about 50% of all estimated transactions. The point I really try and get over is that what is moving is it's not so much the gold price, it's more the value of paper currencies. And that should alarm us. That really should alarm us.
As far as what Alasdair said, he's right. It's not that gold goes up, it's at the currency that we measure gold in, the fluctuations of those currencies in particular in the dollar. I did an interview the other day with a gentleman who said to me, Andy, money creation, which is really the definition of inflation from a classical sense. It's always a monetary event. It's an increase in inflation of the money supply is inflation. Price inflation is a different thing, but when we talk about money creation averaging 7%, I would argue that's a little light, but let's just play that out. He said, For the last decade, it's at 7%. Well, ironically, when we apply the law of 70 seconds to that, which says you take your interest rate and you divide it into 72, and it tells you how long before your principal doubles. So 10 years ago, the dollar was worth twice what it is today by that standard, by money creation alone, by inflation, or pretty darn close to it. And gold was $1,200 an ounce then. So did gold nearly double, or actually just over double, rather? Or did the dollar lose half of its value? I think that's the important thing here, is that gold is the barometer by which we measure the health of the system. And I think the dollar has a long way to go in terms of where it ultimately ends up. It should be much less than it is. The justification for a dollar as strong as it is right now is ludicrous.
The Bank for International Settlements, BIS, announced Thursday that it will withdraw from Project mBridge, a cross-border payments platform initially launched with central banks in China, Hong Kong, Thailand, and the United Arab Emirates in 2021. Saudi Arabia joined in June this year. The BIS exit has raised questions about how this ambitious scheme, backed by China and other BRICS nations, will evolve amid increasing geopolitical scrutiny. Project mBridge aims to enable cross-border transactions using local currencies rather than relying on the dollar-dominated network. In a recent discussion, AndySchectman and AlasdairMacleod noted the potential of mBridge as a BRICS-supported alternative that bypasses SWIFT, facilitating trade without dependence on US-centric systems. Macleod highlighted that while Russia sees a gold-backed currency as beneficial, India and China approach the concept more cautiously. India, economically tied to Asia and the West, fears that such a shift could destabilize global markets. Meanwhile, China prefers a strategic, observational stance, aiming to benefit from Western missteps rather than actively challenging the current order. The expansion of BRICS has heightened Western concerns, with analysts suggesting that the bloc could foster anti-Western sentiment in the global South. Some argue that China and Russia may see BRICS as an emerging alternative to the post-war global system centered around institutions like the United Nations, the International Monetary Fund, IMF, and the World Bank. The BIS's decision to withdraw from mBridge underscores the complex intersection of finance and geopolitics as nations weigh the risks and benefits of detaching from established systems and creating independent networks. Let's get back to the interview.
We've talked about mBridge, a cross-border payment system that was designed by China, Hong Kong, Thailand, United Arab Emirates. It would give these BRICS countries the ability to trade with one another using local currencies, free from the SWIFT interference. And this has been known, right? And it was backed by the BIS Innovation Hub, which always kind of made me like, well, that's kind of strange because this is a Western institution. BIS Innovation Hub has been at the forefront of this development, this technology with China, Hong Kong, Thailand, and United Arab Emirates, and then the fifth full-time participant being Saudi Arabia, a platform that is not compatible with US dollars that we are told will be the settlement platform to trade the unit, a token that will be comprised of 40% gold, 60% BRICS plus currencies, and redeemable in gold. And at the 12th hour, you now have the BIS say, yeah, we're going to pull the plug because we can't be involved in anything that will allow sanctioned countries to trade. You have a spokesman for the State Department who just came out and said, yeah, any system that will challenge the SWIFT, any alternative to the SWIFT system and the dollar threatens global democracy. I mean, the hubris of that, the craziness of it. But I guess my point that I wanted people to take away from this is at the 12th hour, after years of development in mBridge technology, specifically so that these countries could trade with one another in local currencies outside the SWIFT, now the BIS pulls the plug. Now they say they can't do this right after it had been, it's openly trading in its minimum viability, but it is out there. And now they do it. It just makes you say, what? So that to me is one of the most interesting developments.
The thing about the BRICS Summit is it's highly political, and I don't think people really understood just how political it was. I mean, the whole of this business of a gold-backed trade settlement currency started when, I think I'm right in saying, the Russian embassy in Nairobi put out a story that this was going to be on the Johannesburg agenda. It didn't make the agenda. And it hasn't made this agenda. And I think there are very, very good reasons why. I mean, India has reportedly been very much against it. And I can understand that. India tends to be Keynesian in its economics. And not only that, but it trades with both Asia and also the West. And to bring in a gold-backed currency of any sort risks destabilizing the fiat currency world. And India doesn't want to be in that position, nor does China. China has exactly the same problem. And China also has a philosophical approach to these things. She would rather we made all the mistakes, and she just sort of sits there, benefiting from our mistakes. That's been her strategy. It's sort of Confucian, if you like. You know, why interrupt someone when they're making mistakes to your advantage? And that's her approach. So I think the only nation which has a clear benefit from a return to gold is Russia, because if she made the ruble a credible gold substitute, then gold would flood from everywhere. Where, I mean, in the West, its lease rate is 2%. The deposit rate of the Central Bank of Russia is around about 18%. I mean, what's not to like on that arbitrage? And that is what gets gold flowing from one center to another center.
The recent trends in gold prices reflect a shift in global sentiment around currency stability, with gold increasingly seen as a safeguard against weakening paper currencies. Amid this backdrop, international financial structures like mBridge continue to evolve, highlighting a desire among certain nations to reduce reliance on traditional Western-dominated systems. These changes underscore a global reassessment of monetary security and independence. How might the growing movement toward alternative payment systems impact the global role of the US dollar, and in turn shape the future demand for gold as a stabilizing asset? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.